Welcome back everyone, and in today's video, we are going over the top 5 dividend growth companies from the tech sector. So we all know the tech sector as a whole is primarily associated with high growth companies and not a lot of dividends. But I put together a list of the top 5 dividend paying tech stocks who consistently provide investors with a nice growing dividend each and every year, and these companies have great histories of growing their dividend at a massive rate annually, outpacing many other sectors of the market. And of course, these dividend paying tech companies also see a ton of share price growth, and your total return from all of these companies have been absolutely incredible over the past few years, and I believe that's only going to continue for many years down the road. So if you're new to the channel, please hit the like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. And I myself am a dividend growth investor, and my current financial portfolio sits at just under $80,000, and every single company that I own does pay out a dividend that grows each and every year. So in this video today, we're going to focus on the tech sector and go over the best 5 tech dividend paying companies on the market right now. And the first stock is Texas Instruments, ticker TXN, currently trading around $172 per share, and the company has grown by over 31% over the past 12 months. They have a market cap at just over 157 billion and trade with a forward PE of 31. Their current dividend yield is 2.38%, and this company has been a long-term consistent growth play. If we take a look, over the past 5 years, their share price is up more than 234%, which is absolutely incredible. And they continue to grow their earnings each and every year, and over the past 4 quarters, they have beaten analyst expectations by a significant amount. And over their next report, we're expecting 15% year-over-year growth. And if we take a look at their dividend scorecard, the current yield at 2.38% makes up around 74% of their net income, and they continue to grow that dividend at a massive rate year-over-year. Their 5-year dividend growth rate average is 21.6%, which is absolutely insane, and their 10-year dividend growth rate average sits at over 22.7%. So Texas Instruments has proven that they can grow their dividend by a significant rate of over 20% for over 10 consecutive years, which is absolutely incredible. So that dividend that starts out at 2.38% and around $4 per share at this level will continue to grow at a massive rate if history repeats itself in the future. And if we take a look, they have a very safe dividend, and Simply Safe Dividends rank them as a 90, which means it is extremely unlikely that we see a dividend cut coming anytime soon from Texas Instruments. So they are the first dividend paying tech stock that we're going to go over today. They've seen a ton of share price growth, plus they maintain that dividend and grow it by an insane rate year over year. So all around a great company. They operate in a fast growing sector of the world, and I think overall Texas Instruments will be a main player for many years down the road as well. And I have this on my personal watch list, and I am thinking about starting position in this dividend paying tech stock. And if we move on to the second company in today's video, we have Broadcom, ticker AVGO, currently trades around $450 per share, and the company is up just under 49% on the 1-year chart. And if we get a longer term perspective, over the past 5 years, their share price has grown close to 250%. It's no other long-term winner with regard to share price appreciation. Their current market cap is $181 billion, and they trade at a very low forward PE of 17, which for the tech sector is very reasonable. And their current dividend yield sits at 3.2%. So this company has seen some beautiful long-term growth. They pay a nice 3.2% current dividend yield, and a forward PE of only 17 is very nice value from the tech sector. And this company is not slowing down. Their top line revenue continues to grow each and every year, and over the trailing 12 months, we've seen just under $24 billion of total revenue. And you can see, just taking a look at the chart, each and every year, total revenue continues to grow for this business. So if we take a look at that dividend, current yield at 3.2%, their current dividend payout ratio is only 55% of their net income, which means they have a ton of capital left over to reinvest back into the business in order to continue to expand. Plus, it gives them a lot of room to maintain and grow that dividend for many years in the future. And their 5-year dividend growth rate sits at over 52%, which is absolutely incredible. And if we take a look at their annual dividend growth, Back since 2011, they have seen tremendous increases in that dividend. They used to pay out 7 cents per quarter. And in a 10-year span, they've grown that quarterly payment from 7 cents all the way up to $3.60 per quarter. That's absolutely insane. And in a matter of 3 to 4 years, they grew their quarterly payment from 50 cents all the way up to $3.60. So as a whole, Broadcom has been a dividend growth beast. Massive annual dividend growth rate, plus the share price is following along with that trend, posting high double-digit growth each and every year. And if we take a look at their dividend safety score, it is somewhat low, only at 67, but the dividend is considered safe. And personally, I'm not worried about a dividend cut coming from Broadcom anytime soon. So as a whole, I think Broadcom is another very strong company, even at this current level. The company's exploded over 2020, as the entire industry has, and I think this company has a lot of room to grow. A tech stock with tremendous share price appreciation, a nice valuation at this current level, and yielding over 3% is very rare, and I think this really shows that Broadcom may be a nice addition to a dividend growth portfolio. And now if we move on to the third stock in today's video, we have Microsoft. Ticker MSFT currently trades around $215 per share, and the company has grown by over 35% on the 1-year chart. Their current market cap sits at $1.64 trillion, making them one of the most valuable companies in the world. I'm a big bull on Microsoft. I love the company, and I think they're going to continue to grow very easily over the next decade. Their current dividend yield is at just over 1%, so it is on the lower side, but they grow their dividend at a beautiful rate each and every year, so that lower yield is compounded and growing very fast over time. Over the past 5 years, the share price has grown by more than 315%, and Microsoft is actually the second largest holding in my portfolio. I own 44 shares with a market value at just over $9,400. And if we take a look at their dividend scorecard, that dividend yield of 1% only makes up 33% of their net income. So that just shows the company has a ton of leftover capital to continue to expand at a massive rate, and their growth has not been slowing down whatsoever. Just taking a look at their income statement, you can see each and every year, total revenue continues to grow beautifully. And if we just take a look at the chart, beautiful continuous upward trend with total revenue. And taking a look at their net income, we see a similar picture. Massive amounts of net income coming into Microsoft each and every year, and a consistent long-term growing trend by their bottom line as well. And that current dividend, although right now it may be small, it is growing at a rate of over 10% per year, and that's averaged over the past 5 years. And Microsoft also has the highest dividend safety score possible at 99. So that just means it's extremely unlikely that we see a dividend cut coming from Microsoft at any point in the near or long-term future. They have some of the best financial statements in the world. They have very high net profit margins. They bring in a ton of capital each and every year with a very strong balance sheet. So I don't think we see Microsoft stock taking any hits over the short or long term as well. Plus that dividend will consistently grow for many years to come. So I'm a big bull on Microsoft. I never plan on selling my position. And during any market dips, I always look to buy more of this dividend growth tech company. So now if we move on away from Microsoft into the fourth stock in today's video, we have Qualcomm. Ticker QCOM currently trades around $155 per share. And this is a semiconductor company that once again I have very close on my watch list, and I've been following along at this company for any dips in the share price. I do plan to add it to my current portfolio. They're up just over 72% over the past year, and on the 5-year chart, the company has grown 238%. Their current market cap is $176 billion, with a current dividend yield at 1.67%. And the forward PE right now at only 22, I actually do like the valuation of Qualcomm even after this most recent run-up. If we take a look at their dividend, an average yield for the tech sector at 1.67%, again, very low net income payout ratio of only 36%, so it actually is very sustainable, and I do believe it can continue to grow for many years. A nice average dividend growth rate, once again, averaging around 6.7% annual dividend growth, which is actually very close to the total market average, which kind of grows their dividend between 5 to 7% per year. So not anything crazy with regard to dividend growth, but a nice share price appreciation plus a growing dividend is a nice sign to see from a semiconductor company, especially because analysts do believe that the semiconductor space will be the fastest growing industry over the next 3 years, and some main players like Qualcomm are going to see some great benefits. And with regard to their dividend, it is considered safe. Their dividend safety score comes in at 80. So once again, another brand where we're not worried about a dividend cut coming anytime soon. So we've already gone through 4 of the best dividend paying tech companies, but now we're going to jump over to the 5th and final stock in today's video, which is Cisco. Ticker CSCO, currently trades around $45 per share and is down close to 4% on the 1-year chart. They are actually the only company that is in the red of our top 5 list. And over the past 5 years, the company has grown just under 80%, and their current market cap is $191 billion. So a little bit of short-term struggles for this business, and because of this decline, they're trading at a very low forward PE of only 14.34, and their current dividend yield sits at just over 3.17%. So if we take a look at their dividend, nice just over 3.1% dividend yield, sustainable payout ratio of only 48% of their net income, and they average their dividend growth over the past 5 years at close to 11.8%, which is absolutely incredible. So Cisco has actually been growing their dividend at a faster rate than Microsoft, which is a very strong sign to see. And their dividend safety score is 91, which is considered very safe, showing that although the company may be on a little bit of a downtrend as of late, their dividend sustainability is still very strong, and we are not expecting a dividend cut over the short or long term coming from Cisco. So definitely another company to take a look at. They have a nicer, higher yield compared to the 1 to 2% we've already gone through, coming in at 3.17, and definitely a brand to do some more research into that may have a nice recovery and see a lot of share price appreciation along with the 3% current dividend. So thank you for watching, everyone. I am the Gen Z Investor, and those were 5 of the top dividend-paying tech companies on the market right now. Like I mentioned at the start of the video, tech companies are not really associated for their dividends. They're really known as the high-growth companies that do not pay out any cash payments, but for people like me and myself and many others who follow this channel, I only invest in dividend-paying companies. It's my philosophy. It may be right, it may be wrong. Everyone invests in different ways, but I love the sustainability of having this extra passive income coming into my portfolio each and every quarter, and I like total return. So I don't just focus on dividends, I take into consideration the entire picture, the total return, including the share price growth, and that's why if you take a look at my portfolio, I own companies like Apple and Microsoft who do have very low starting yields, but the share price appreciation does provide a nice total return for my overall portfolio. So thank you for watching. I hope you enjoyed the top 5 tech paying companies. See you in tomorrow's video.